Welcome back to Reimagine 2021. I'm Yonah Hochhauser, and today I'm glad to be joined by Tim Frost, CEO of Yield App. Tim, thanks so much for joining us.
Oh, thank you for having me today.
Well, Tim, for those viewers who aren't familiar with who you are, you want to give a little background, kind of who you are and how you got into blockchain?
Yeah, absolutely. So I first got into the blockchain industry in 2014. I was interested as a like a lot of people. I was interested as a kind of a trader. That was, very curious of everything that was happening. Altcoins, Bitcoin. Just wanted to kind of get involved. I came in. I started just. I just really kind of, I guess, fell in love with the space and just started to see kind of, well, what I thought would be everything that could be potentially kind of emerging out of this space. And so I've had my personal kind of love hate with kind of crypto. I'm sure a lot of people have. I came in. I started really. Working in the crypto space. I joined actually the Wyrix team in 2014, or sorry, 2015. Originally joined them as kind of a contractor. Ended up growing up to become like a part of the founding team, a shareholder at Wyrix, and ran marketing and business development there for about the first year and a half. And that was my first real trip down kind of like that fintech lane. I started to develop some skill sets and especially early stage kind of development. I then started a kind of a consulting firm that was kind of focused on building blockchain and fintech companies. Just always very my personal interest is that how financial technology is going to change the way we kind of interact with money, both crypto and kind of more traditional finance. And so I've helped incubate and accelerate a lot of kind of early stage companies, and worked on a variety of blockchain companies as well. And to kind of take you where we are now, about 9 months ago, I was during the COVID lockdown time. I think like most of us spend more time on the internet, more than even normal. And actually one of my co-founders at Yield had like a friends and family DeFi fund, and I had kept hearing about DeFi for the last couple of years, and just more and more this kind of had just been popping up on the radar and everything. And then I finally sat with him and spent about a week with him, and he just really just took me down everything that was happening. And now Ethereum had really kind of evolved into like to the beginnings of everything that it was kind of promised. And I think I just basically at that time just dropped everything I was doing, and I was like, okay, well, this is amazing, but it's complicated. I can't explain it. I can't explain it to my mother, right? I have no idea, but everyone's just looking at me. But it's like, okay, well, there's something really tangible here. There's real yields here. It's built on fundamental principles, and how can we bring this to a much larger audience? So to kind of go down this path, and we moved quite quickly. Mid-August was like the first kind of meeting of kind of the Yield team, and we've kind of really kind of accelerated things. Have done a lot, I guess, over the last months, and we've essentially taken Yield to market, which is a fintech that be able to provide kind of these DeFi yields to a much larger audience. So we're really going to focus on a retail audience and give high yield bearing accounts to essentially almost anyone is our ultimate vision.
Well, I mean, I think it's the perfect timing. There's like this perfect storm of in the traditional finance, like absolutely no interest or negative interest. Combine that with, especially this past summer, when you guys were starting this all up, when these crazy high APYs in the DeFi space. But for let's go back to to DeFi craze really exploded this past summer. And me, like many other onlookers, we saw, this yield farming craze, these insane APYs, 100%, 200%, 1,000%, all these crazy high APYs. But there was two real things that kept me out of it. One was it was new and it was confusing. I was scared to go in. It's not simple, and also I was also put off by the crazy high APYs because I'm like, wait a second, there's no such thing as a 200% return, 200% APY. So has this yield farming space? You're saying it's tangible. Are these real? Do the numbers actually back it up? And has it cooled down since? I mean, obviously, it seemingly yield farming has cooled down since. Has it kind of matured to a point that it's something that even a regular person could jump into?
This is well, it's quite a loaded question here, I think, because I think you have something on all sides. Originally, DeFi was built on good principles. The companies obviously that have really pioneered the space, the Aves, the compounds, the Uniswaps, the synthetics of this industry that have really built great tech, fundamental economic systems, and the fact is that it has been working. All the stuff we saw last summer, like it's all lumped together, right? The same way in 2017 when everything was kind of lumped into this ICO cycle. Then all of a sudden, everyone was trying to do an ICO for every random business idea that they ever had, right? And so naturally, you do see a lot of this, and so we don't really subscribe to this massive unsustainable high APYs where there's not really much there besides a short term high APY that maybe last a week or two. And so you see the full sides of the spectrum. So while this is all kind of part of DeFi, another reason is why we are building what we're building, because they're fundamentally okay. The way we're building this is everything that we kind of invest into on behalf of our clients is things that we feel that are going to be here for many years to come, and we think it's the core fundamentals of valuable ecosystems that will just continue to grow and blossom. So will the high APYs continue? Well, I think there's a difference on what people think of high APYs. Users on our platform earn up to 20% APY, and we do feel this is quite sustainable, especially for everything we've done prior and everything we see into the future. Some of the things I think you're more referring to are like the 4,000% APYs, and the answer, in my opinion, is no, it isn't sustainable, but it has been kind of part of this kind of evolution to get us to where we are.
Mm-hmm. And so how does Yield app actually work? I'm a user. I have my USDC, my USDT. What coins do you guys currently support?
Well, that's actually what we support today: USDT and USDC and YLD, or our own native token. So
Mm-hmm.
we're trying to make this very, very simple, because our ultimate audience is people put money in the app and they forget about it and they're earning their yields. Mm-hmm. So today, this is exactly what happens. You sign up with us, you do a form of light KYC, and you essentially have a financial account with us. You can deposit your YLD, your USDT, your USDC. And when it's on there, you can invest. And there's a kind of a membership tier with our membership token, and you can earn up to 20% APY. You hit the invest button, and from your point of view, I mean, that's all you do. Every 24 hours, you are earning yields. You're earning 10% APY in the stable coin that you've invested, and you're earning up to 10% APY in our kind of native token as well. So what happens in the background is that pool of capital is being essentially aggregated, because entering into DeFi pools is complex, it's expensive, and there's just sheer, I guess, problems involved. And the way we've kind of built out our strategies is it's, you can't really duplicate what we're doing profitably unless you're investing on your own behalf, 6 figures in kind of capital. So the barrier to entry is very high. We take kind of diverse positions in the back end, and with obviously places that we deploy capital is where we deploy our own company capital, and most of our team deploys their own personal capital. So we believe this is kind of very sustainable. Everything has been thoroughly audited by our own internal team, external kind of smart contract auditing teams, and all the business analysis, everything has gone through kind of a rigorous checklist. Right now during this call actually is one of our weekly kind of risk meetings that I'm actually missing right now, with they're kind of covering it in detail, like I guess essentially potential risks that are in the market. So all the complications of entering the DeFi, that's what we are trying to obfuscate from the clientele. We are running this like a managed fund. And so one of my co-founders, Justin Wright, he's run many traditional kind of financial funds before, and we've constructed or kind of or our company as like essentially it's a DeFi fund. It's an open-ended fund for kind of more of a for most anyone is kind of where we're at. In the near future, we're offering Ether and Bitcoin funds. Those are kind of the testing environments, and we're continue to kind of build out our fiat rails and look to offer more and more different coins. But that's kind of a phased approach.
And when someone is actually investing with you, are they then transferring you the actual keys? Are you guys holding the actual keys for the crypto as well?
Yes. So there's the non-custodial. So we would be more like an exchange type environment. And the way we are operating, and people hand us their keys, and we take custody of the coins. We use BitGo wallets, insured wallets. We have kind of a full auditing trail that we're kind of building out. We will have kind of full transparency with the ultimate end clients, and they can be able to redeem their coins at any time. They can be able to uninvest at any time, withdraw from the platform with no really barriers. So, but yes, the only way we can do this is actually to have custody and to kind of be able to enter into all these diverse positions and with batch transactions. So it's more like the power of aggregating capital together is how we can be able to kind of defeat a lot of the high gas fees and a lot of the complications that we currently see.
Yeah, now you brought it up, how has the latest bull run with the explosion, both in price and in usage, gas fees higher than usual? How does high gas fees on Ethereum, how does that affect your trading strategies, if at all?
Well, it doesn't affect ours, and if anything, I hate to say this, but we kind of almost root for high gas fees, as we're really just getting off the ground as a company, because it just makes investing into DeFi and just be able to try to do this yourself, the barrier to entry is so high. So when we're moving multi-million-dollar positions in and out of different pools, like the price of gas is fairly irrelevant at that point. While if you're trying to do the same type of positions with your $10,000 in USDT, it makes it essentially it's unprofitable for the majority of average users unless you have your own kind of trading team.
Right. Now, I mean, this is I think a very needed product, especially as this market matures. This is one of those products that would make up a mature market. There are, if you're an expert trader, if you understand DeFi, there are options to go your own way. But I do think that this is necessary for a lot of those, if we want to bring in newcomers, mainstreams, even crypto holders who are new to the DeFi game. I do think this is a great idea, just to allow them to say, hey, here's my crypto. You know more than I do, how to extract the highest yield, go for it. But you guys aren't the only player in the space. There are other similar players like BlockFi and Celsius, Nexo, just to name a few. What separates you guys from the other similar competitors in the sphere?
Yeah, no, absolutely. Those are great companies, and it's going to be hard to kind of say where we kind of differentiate from. Overall, I mean, we have it's a similar type of business model, and to be quite frank, I mean, that was their model. I think those are some of the great best companies in the space, and we've taken a very similar type of approach. The way that they kind of have a user growth, grow their AUM, but overall, right now, like we feel like we're producing much higher yields. So in the end, I mean, we are a newcomer. These guys are established. Nothing against these companies, fantastic companies, and a safe place to park your crypto. But we are targeting, since higher yielding accounts is kind of where we feel like we're really going to initially be able to enter the market.
Now, right now, if we're looking at the DeFi space, obviously it is very new. It's a baby in the overall scheme of technologies, and but it has made slowly but surely making progress. But right now, what it seems like the DeFi space, the decentralized finance space, seemingly is just mirroring products that already exist in the traditional space, but in a decentralized manner. For instance, what I would be interacting with you guys is similar to me going with the fiat and putting money into my fiat bank account, returning interest on it, or giving it to a hedge fund or whatever it may be. This seems to be, the DeFi space so far seems to the most part just to be mirroring the traditional space, but using blockchain. One, do you think this is even an issue? Is that fine if DeFi just ends up being a mirror of traditional finance on the blockchain in a more decentralized manner? And two, when will we start to see truly unique DeFi products that aren't really even possible, that are just a totally different idea from the traditional finance product space?
It's a fantastic question. I think it's a matter of time. Right now, I mean, if we see what's happening in DeFi just over the last, let's say, 18 months, I mean, we went from $100 million, maybe. I think we're over 15 billion today. I mean, we've had a great growth trajectory, and I think all signs are pointing towards hitting a 100 billion AUM during this year. And obviously, capital entering the market is going to attract entrepreneurs like myself. I mean, this is what has made me kind of drop everything in my life to go and build a fintech focus on this DeFi market. I think it's just about getting the right people and the right entrepreneurs in the space. And obviously, once the capital really starts to go in there and it is working, which it is working, right? And I think this is why everyone is so excited. It is working. It is working, I think, more efficiently in a lot of respects in the traditional kind of financial world, and it's more transparent. It's a market that everything moves 24/7, right? And it's quite powerful. So I mean, I think it's only a matter of time. I know people are working on new types of kind of financial instruments, and I think it's anything. I mean, this is going to take time for people to wrap their heads around, because when you can relate something to a more of a traditional kind of financial instrument, that makes sense, right? I mean, the ICOs, when they were first launched in like 2014 or so, and people, it took years for that really to kind of grasp what that ultimately could be. And then obviously, we've seen the good and bad that's kind of really coming out of that market. And I think it's just going to be said. It's a matter of time. And if I knew what that was, I'd be working on it right now. So.
Right. I mean, listen, DeFi already has that advantage, like you mentioned, of transparency. And like you mentioned, of fees. If you're trying to, in the traditional world, move around $1 million deals, you're going to be paying a lot higher fee, even with high gas prices in the DeFi space. There are inherent advantages, and like you said, I do think that we will get there, and we are constantly improving and becoming more efficient. Now, like you mentioned, one of the big things that helps growth is big capital coming in, and a lot of people are pointing the recent bull run in terms of the actual markets and onto actual Bitcoin, Ethereum, the altcoins. are pointing to the big influx of capital from institutions, whether it be from publicly traded companies like MicroStrategy, Michael Saylor's MicroStrategy investing at this point billions of dollars into Bitcoin and Square, as well as just behind the scenes, other institutional investors are actually coming in. That they're going mostly into Bitcoin from what we've seen so far, and mostly as a hedge against U.S. dollar and other things of that nature. When do you think we're going to actually see the same kind of institutional money come into the DeFi space? Actually look at these tools and say, hey, these are great tools. These are lower fees. We could do new types of things. When do you think we're going to see that money come into the DeFi space?
Well, I mean, there are people working on this right now. I mean, we are ourselves as a company, we are on constant calls with people very, very interested. But my honest feeling that it's going to take a while, and I think there's going to be, I think some barriers that people are going to have to cross, right? And obviously, it's understanding what is happening with your capital, understanding that you can redeem your capital, and just understand the full risk. And I think it's going to, traditional funds said we were constantly talking to them. Well, we're kind of exploring opening a business line on focus on offering institutional clients or kind of a DeFi fund, and that's something we're actively working on, actively having conversations on, building materials around. But they're going to want to see a track record. Traditionally we're looking at like 2 years. They're going to want to see 2 years kind of audited reports, and if that's where it's going to go, I mean, we're still going to be quite a ways away. I know like companies like Aave have a kind of great teams kind of working on that as well, that are actively working on how they bridge traditional markets over here. And so I think it'll happen very slowly. There'll be a few adventurous people kind of looking to bridge those gaps, but I think it's just, well, they're gonna move slow. Same way I think in all the crypto cycles, like the retail has actually beat kind of institutional on most of the trends. I think they will again in the DeFi kind of trend beat the institutional investors. So when these fund managers are finding out about their sons kind of making all these high yields through DeFi, eventually they'll start to kind of catch up with this. But I think more and more we've seen all the trends led by retail compared to maybe traditional kind of sectors.
Mm-hmm. Yeah, for sure. I mean, institutions are traditionally risk averse when it comes to new technologies that they don't understand, especially in this space. If you look at the earlier years of Bitcoin and Ethereum in the crypto space, and I'm talking, not even that early. I mean, even 2015, 2016 is early. When we were looking at the products that were available to users, it was mostly exchanges. It was exchanges that would help them hold the funds and help them trade the funds. And what we saw a lot of was exchanges being hacked. Because it was new, because they were just still figuring things out. They're figuring out best practices, cold storage wallets, and really beefing up their infrastructure and security. We were seeing constantly. It seemed like every single week there was an exchange hack. And as this market has matured, as these exchanges have kind of centralized and become bigger, you got your Coinbases, your Binances, your OKXs, where they're becoming bigger and they're learning their lessons. You're seeing less and less of those big exchanges being hacked. And therefore, there's more user trust in these exchanges, so they're less scared. It's no longer a gamble, or as much of a gamble, putting your funds into an exchange. But now we're seeing with DeFi, which is very early on. This is like 2008, 2009 Bitcoin in the DeFi space. So we're seeing those same growing pains, understandably. We're still figuring this technology out. We're still figuring best practices out. So we're seeing a lot of not only hacks, but exploits, poorly written smart contracts. So the DeFi space does hold a lot of risk, not even nefarious risk, but just learning, figuring shit along the way risk. How do you guys counteract, or how do you guys protect yourselves against, a lot of these early growing pains in the DeFi space?
Well, we're really taking a very conservative approach. I said we want to know everything that's going on. But where if you kind of strip down our kind of portfolio right now, you would see it was more completely vetted. Different protocols that have been, I guess, for lack of better words, they've already been time tested. They've already been, everyone has already came at them. The any potential exploits were what we feel are very, very much likely to have already kind of passed, right? And so, like I said, we're not chasing the new upcoming more exciting kind of thing to hit the market. We have a very simple philosophy is don't lose any customer funds ever, right? So if that sacrifices potential upside, I mean, that's what we are doing. We have a full checklist of everything that we go through in a thorough audit. So on the business side, we make sure everything is we've this business intelligence side. So we've seen different exploits that have been happening, and so we have a team that it internally goes through everything and just thoroughly vets every single outcome before even considering deploying capital. We've set up things such as triggers. So we essentially have what I would almost say is almost like a panic button. So in case of someone is thinks something's happening with a particular pool, we have ways of unwinding all of our positions with a few buttons essentially. So we've been setting up these things, and we know like nothing is there's no such thing as no risk with any type of asset class. So but we're, I guess, spending days and weeks and months that are just kind of exploring every potential risk that there is.
Of course, Tim, like you said, there is no such thing as a risk-free investment, nowhere in the world, traditional space or DeFi space. But in the traditional world, there are some things you don't have to worry about, like a smart contract being poorly written or exploits. Do you guys have any insurance, or is there any sort of coverage for your investors in the event of lost funds or anything like that?
Yeah, it's actually it's a good question. So initially, we're kind of insuring with our own capital the initial investors. We have pegged out in our terms and conditions 1% of the network proceeds actually is going into an insurance pool, which is going to turn into an insurance product. So this is all kind of under development right now, and it is, well, it's all in motion, but it's going to take out a little bit of time. We've talked to a lot of traditional kind of financial or insurance companies, which that is a lengthy conversation. We've obviously looked at the insurance companies into the space, and ideally as we kind of diverse positions, but we have to be in a position that we can properly insure our client deposits. So that is a top goal of ours. We do have a team kind of working on this, and we're making strides, albeit just maybe it's going to take probably until at least Q2 until we have something of substance on that side. So,
and we touched upon this a little bit before, but essentially, we are in the midst of a pretty nice bull run. There has been some pullbacks recently, but overall, when a nice bull run, the market's up. Bitcoin is hitting all-time highs, Ethereum's encroaching all-time highs, and usually when this happens, there's a lot of FOMOing in. There's a lot of this is when the moms and the grandmothers and the brothers and the sisters start. What is that crypto thing? And they start coming into the space. And they usually, the first thing they do is they'll come in, they'll buy Bitcoin or Ethereum or some altcoin that they were sold upon. Do you think DeFi it's kind of tough because inherently it's decentralized, but does DeFi need to market itself? Do DeFi products need to brand themselves? So that these retail investors and these mom and pops are coming in, foaming into the just to the trading markets, that they'll actually know, oh, hey, there's this whole new sphere that I could even jump to from there. I could get deeper in.
Well, do we want to market ourselves? I mean, I think it's going to happen. I mean, at least my my philosophy on this, and I think the market intel that we have. I mean, the DeFi, decentralized finance, we see this as becoming a kind of more of a common term during this year, 2021. We anticipate there's you're going to see the guys on Wall Street kind of chit chatting about DeFi now, and what does this mean, and a lot of loose kind of connections. So I think it's going to come. People are going to be, of course, they're going to be attracted to the massive Bitcoin run that's been happening, and they already are, right? And naturally, people are going to be looking around for other kind of opportunities. I think 2021 is going to be, there's going to be no shortage of interest, and I think DeFi is going to become more and more of a search term and common trend. I think of people that are looking for kind of new places and safe places to be able to store capital.
Mm-hmm. And I think one of the biggest changes, let's say in the financial and the investing space, and in the way that people manage their money and hold their money, if you go back before the internet, essentially, where did people invest their money? It was the local bank. That people would people essentially kept their money within a relatively close geographic location from them, and that has pretty much stayed the same way, at least in the same jurisdiction up until today.
Yep.
But now with the growth of cryptocurrencies and borders not really mattering, location not really mattering, because there isn't really anything physical. We've seen the when I look up at where I'm going to invest my funds. Are you able to hear me again? You're able to hear me? Okay, you froze that. When I look to invest my funds, in the deep, and especially in crypto, geographic location matters less. But when we're looking at how regulators regulate the space, they're still regulating by borders. They're still, hey, are you a U.S. company? You're going by these rules, and whatever regulator you're going to. How do you see this? Do you see this changing in the future? Do you see that that because money is becoming slightly more borderless, or crypto at least is more borderless, there isn't really inherent borders to it. Do you see it being borders and shackles are thrown on it by regulators, or do you see that it will actually be able to kind of break through, and the regulators will have to actually change themselves to adapt to this new reality that, hey, if I'm in the US, even if I say, hey, you can't trade with this exchange in Singapore, I could use a VPN, I could get around these things. So who do you think is going to have to bend? Will it be the regulators, or will it be the crypto space?
Well, I think the regulators, as is, I mean, they have their rules, right? And it's to protect their citizens. And so, I mean, I think I'm not by any means anti-regulator like many of the crypto are in the space. I mean, I think that they have the best interest at where they are actually trying to abide by rules and regulations that have been put into law, and they are looking to protect their citizens. So the biggest one obviously is the U.S. government, and they are the I guess the most aggressive at the same time. And I think it always is just that, though. They are they want to know what U.S. citizens are up to, and they're essentially trying to protect their citizens. But I mean, there's no doubt, right, that that crypto is borderless. It's semi-anonymous if you attempt to be, and it is quite difficult to properly govern, because where are these assets at? I mean, it is a very complicated scene, right? And there's so many crypto companies that are based offshore and based in kind of friendly jurisdictions, but do serve kind of a global market. So that is already here. It's hard to see what the future predicts, but overall, I think for the most part, though, the regulators have let kind of crypto evolve. Actually, more than I've ever predicted would happen. I always thought they would actually put shackles onto the industry, and I think it's hard for anyone to really argue that that has actually happened. Because they have just continued to let innovation kind of to grow, and very very little enforcement has really come down in my opinion. I have always anticipated much more would actually happen. So
Mhm, mhm. Now, if we're drawing parallels to the traditional finance space, something that we've seen a big rise in the DeFi space is these governance tokens. Essentially, if you have them, they hold value, but also they give you voting power on the future of the protocol, of the network, whatever it may be. And if you want to draw a parallel to the traditional space, this is more like a shareholder who both might be investing in the share because for speculative reasons, he believes it's going to go up in price, but also he does have that voting power. And so what ends up happening in the traditional space, if these funds that do accumulate massive capital for investments, they also do hold, in certain cases, some sway over the companies they're investing in. So when we're looking at you guys, if you guys are in the DeFi space and you guys are investing this large capital and potentially gaining a good amount of governance tokens, do you have any interest in actually governing and dictating the direction of these protocols, or you guys are merely in it? You guys will get the governance tokens and sell them off because for profit making.
well, our portfolio team is obviously very involved with the everything that's kind of happening, and especially all protocols that we're involved with. So I would say yes, no, and obviously we try to directly even work closely with the teams that are actually the ones that are actually developing these different protocols, and having your voice heard is very powerful, and just having the right to vote, right? But overall, I see this as, your real power is just to take your funds elsewhere, right? So while I love the idea of the governance tokens, and I think that'll just continue to evolve and start to play really kind of fundamental roles in everything we're doing. I think the biggest and most instant choice you have is your voting with your funds. So if you don't like how something is ran, if there's a new update that you're not that you don't agree with, there's very little stopping you from moving into a completely different protocol that you do get behind. So it is a great, and it is nice to, and we all want to feel like we are empowered. So it is a good movement that's been developed. So.
Okay, and are you guys live now? Am I able to take my funds and go invest in Yield app?
So yes, if I get your email, I can get you whitelisted. So we have about 300 users on the platform. I think over $500,000 in capital has come in just from a few people testing it out, and I would actually love to get you whitelisted and get your feedback on what we're building, and we're gearing up for more of a public launch in the near term. Just want to get through and get the whole platform running at optimal kind of function.
Okay, well, those are all the questions I have for you, Tim. This is your time to shill. This is the Shill Zone. Shill your product, shill your favorite TV show, shill whatever you want right now. Go ahead.
Well, I think the powerful position that we're in, and what we love to get from your clientele. Well, first, if people are interested in working with a up and coming fintech company and a team that have built many awesome companies before, we've been here, we've done great things. Please, you can reach out to us, info@yield.app. We're always looking at talented people, whether that's developers, people that want to work in the business development department. We're about 25 full-time staff and growing quite quickly. So that is welcome. Overall, this is a very kind of turbulent market, and if on a personal level, I think that, there's going to probably be a correction period in Bitcoin. I'll either be right or I'm wrong, and we'll know in the future. But if this is a correction opportunity, I think the Yield app is a perfect place to take your hedged Bitcoin gains and put them in with us and earn up to 20% APY and waiting for that next kind of buy-in period. So once we have our Bitcoin and Ether funds in, there's going to be no reason to go anywhere else. So anyways, appreciate it, Jonah, today, and great interview, great questions, and
Tim, I appreciate you taking the time and giving us, a little bit behind the scenes about what's going on at Yield, as well as your overall thoughts on the space. So I really do appreciate you taking the time. And for all of our viewers here at Reimagine, I'm Yonah Hochhauser. Thanks for watching.